Good morning. I'm Steve O'Hare from Acuity Signal Centre. Welcome to Talking Bull. Today is the 12th of July. I'm going to go through the main news headlines and then dive into some technicals. By all means, reach out through the chat facility and ask me to take a look at any market that you may be looking at and would like some opinion on what I can see or what I see from a technical standpoint. So let's kick it off with the news headlines. Bring a little slide up so we can know what we're talking about. So German ZEW Investor Confidence Index retreated to negative 14.7 for July from negative 8.5 previously, and weaker than the expected reading of negative 10.5. The current conditions component also edged lower in the month, but was slightly stronger than expected. Chinese new loans increased 3,050 billion Chinese yuan rather, for June from 1,360 billion the previous month, and significantly above the 2,335 billion for the month. Total social financing also increased to 4,220 billion from 1,560 billion the previous month, so a big uplift in loan growth there. Chinese data also underpins risk appetite, with markets also hoping that global interest rates are close to a peak. The dollar initially stabilized on Tuesday, but gradually lost ground and posted further losses in Asia amid speculation that US interest rates are close to a peak. The US currency index posted a fresh 2-month low during the Asian session on Wednesday. Reserve Bank of New Zealand held interest rates at 5.5% following the latest policy meeting, which was in line with market expectations. The latest US consumer prices inflation data will be released on Wednesday today. Consensus forecasts are for prices to increase 0.3 on the month, but with favorable base effects, the annual inflation rate is expected to decline to 3.1 from 4%. This would be the lowest reading since April 2021. The underlying rate is forecast to decline to 5% from 5.3 previously. The Bank of Canada will announce the latest policy decision on Wednesday. Central Bank will also release its latest monetary report. Consensus forecasts are for a further rate hike of 25 basis points, taking the rate to 5%, with forward guidance from the bank watched closely. So that's pretty much the headlines. Let's dive into some technicals. I'm going to kick it off with a look at Bitcoin first. Bitcoin's in a bit of a range at the moment. We can see on this chart here, this is a daily chart, that we're stuck in a little bit of a range since we've had this reaction rally from around about the 25,000 level. This was quite a significant level. On the weekly chart, we can see that we've got a bottoming formation, inverse head and shoulders formation. We retested that neckline with that dip to 25,000. The measured move target for this move is 35,000. Looks potentially on the cards. We've still got this band of resistance that proved to be a very important support when we did actually when we were marching higher towards them all-time highs. So at the moment, we're forming some sort of potentially bullish flag, which again will have a measured move target just above that 35,000 level. So Bitcoin looking pretty positive at the moment. XRP, not so much. There's a band of resistance that we're challenging around about that 58.5 levels. That's the sort of peak we saw. That was on the 27th. The week of the 27th of March, got up to 58.5. So that seems to be a little bit more on the back foot than Bitcoin at the moment. So watching that very closely. Obviously, with this dollar weakness that we're seeing as well, this will lend some support to these assets because they're priced in dollars. That's the only reason. So let's take a look at some commodities now. Again, we're looking at the weekly chart, but I'll jump to a few short-term charts on the other assets. But by all means, please reach out to me if you'd like me to take a look at something in particular. Morning, Mark. I'll have a look at Aussie yen. No worries at all. We'll take a look at that as soon as we jump to the FX after the commodities. So gold. This is obviously very dollar reliant, as you well know. Probably if you're watching our shows regular, we talk about it a lot. We can see we've got a little bit of a stall in the sell-off, and potentially a little bit of a reversal. Again, we can highlight a bit of an inverse head and shoulders formation from this 4-hour chart. Looks quite clean at the moment, and we are above the neckline. This is something I looked at yesterday for our gun to head trade idea, which we'll dive into again later in the show. And we'd got a nice little break higher, got up to 1941 yesterday. The neckline I'm looking at is around about this 1934 and 35 level, which we're trading at now. However, you can see this bearish engulfing candle forming on the 4-hour chart. So coming into this sort of early start to the session, this morning UK session, we're a little bit on the back foot, but maybe that's an opportunity to really sort of play off this neckline. I'll see when we get to that part of the show. Obviously, dollar index is a really sort of like key part to this. Again, this is a 4-hour chart, and we can see that the dollar index has stalled 101.34 and reacted slightly higher from that. If we take a look at the dollar index on a longer term basis, we'll dive into it in more detail in a second, but you can see we're approaching sort of quite big support levels on the downside, but you can see what a move it's had this week. Looking at basically about a 2% drop on the dollar value this week against a basket of currencies on the dollar index. So that's covered that off. Let's take a look at crude oil. Again, daily chart, trapped in a bit of a range at the moment. The low on WTI crude oil around about $67. The high we're looking at around about 54. Let me just double check. No, we are sorry about that. The chart hadn't updated. Should have checked that out. We have broken out of that channel, but we are approaching the resistance level built from the 24th of May this year. We got a peak up at 74.70. We've been up to 75.01 overnight. So we are challenging that resistance level. Very key for it to hold on here. We have all inventories out later on. That's going to be a key and potentially volatile figure to be watching if you're trading crude oil. So take a look at that. Be very aware of that. Comes out around about 3:30. So that's trading around good resistance levels, and you can see on the short-term charts, the 4-hour chart here, nicely above the Ichimoku cloud. Plenty of room for a bit of a pullback for say a couple of dollars to the downside, if we manage to sort of like make the most of this stalling here, and it'll still remain bullish on the short term. So and on the 1-hour chart, you're seeing this nice trend higher, and again room for a move back for almost $1 before we get too nervous about this momentum stalling on the short-term charts. From there, we'll jump to, let's take a look at Forex. I'm going to take a quick look at the dollar index. One to watch. Here's the weekly chart. Here's the big band of support that we're really focused on at the moment, from 180, around about that level, all the way up to where we're trading, or where we've been down to today, sorry, on the week, which is around about 101.40. Taking a look at the daily chart gives us a little bit of a clearer picture, and we can see that previously we've found some nice support around these levels, and it has reacted higher. So but we are coming at quite an aggressive pace. We can see the sort of like the move down we had from the 8th of March and how it extended lower. We've got that for over a month of bearish sentiment coming in there. This doesn't show really any signs of slowing at the moment. So we've had a little bit of a jump up from the low at 101.34, but the dollar on the back foot as we move into today, Wednesday. Obviously, euro dollar, that will have a positive impact on euro dollar. Dollar index is predominantly euro dollar. It's about 60% of the basket is euro dollar. We've just broken up through resistance at 110.12. There we can see that. That shows a bit of progress to the upside. Next real big level is around about 111 on the euro dollar, so that's one to watch. Short-term charts, the hourly and the 4-hour, nicely above the Ichimoku cloud. So from a short-term basis, I'm still quite confident, positive on that. Sterling dollar has been really positive recently. Obviously, UK really looking at maybe a more aggressive a move on interest rates compared to the US now, sort of playing a bit of catch up. We're also looking at potential for rates to go to 6.5%. That's the sort of the talk in the markets at the moment. So plenty of room on the upside for cable. Let's take a look at the weekly chart to really get an idea of really the next resistance levels. From a breakdown perspective, we had a lovely double top formation here, which played out nicely and then broke down again. That's up at 131.70. And let's bring a Fibonacci into this to really see if we've got any other levels we should be considering, which might sort of like coincide with that. We're through the 61.8% fib. That's a key fib level. That shows a normal correction. We're exceeding that normal correction. So feels like more potential for the upside on cable. And especially if we're sort of like hitting them 6.5% rates, everyone will want to be in cable, benefiting from that rates. So Mark, I'm going to take a look at Aussie yen. I'm going to jump to Aussie yen now because Mark's asked, so that's fine. We're happy with that. Let's look at the weekly chart just to get a bit of a view on that. I haven't got many things on here, but let me take a look. First of all, we're having a bit of a correction over the last month. Fibonacci telling us potentially got plenty of room for the downside without it impacting too much on this trend. Overall, you can see that we stalled in front of the high from the week of the 12th of September last year, where we topped out. Ooh, let me just make sure I get that on there. Topped out at 98.60. We stalled now. This time we've stalled at 97.67, so in front of that resistance level, and nice pullback lower. We'll actually bring up the 38.2% fib as well. That's quite close. That's coming in at 93.23, and again, 38.2% Fibonacci retracement is a very, very common retracement in technicals. So nice little pullback to there, and also that will line up with a little bit of support which we'd expect from how price action stalled at this previous level on the upside, so 93.03. So I would say the pullback to this 93.03 to 93.23 level could potentially be a bit of support, and would provide, if we see some sort of stalling on the short-term charts, then that could potentially give us a little bit of a good risk-reward trade idea to go against this, be a bit of a contrarian move. So we've got this on the daily charts as well, highlighted obviously from a previous look at this pair. And yeah, I would say that that's quite significant. We can even break it down and take a look at what fibs look like on just this last part of this extension higher. 61.8, we're through that. 78.6. I'll be a little bit nervous from a long perspective if we do actually get below that 91.87. So these levels are, you know, not right really short term, but you can see that sort of like a normal move, the average true range of this sort of pair is around about a point. So already today we've had a 94.13 the high, 93.36 the low. Still got sort of like 20 pips on the downside before we're sort of extending past that average move in the market. So I'll yeah, happy to sort of like fade into that, as long as you get sort of you know, wait until you get that hourly chart or 30-minute chart which maybe stalls at this level, posts a nice little bullish candle. Don't dive in straight away just because the levels are here. You want to see some sort of reaction from that level before fading the move. I know it's sort of like you know, you can be a little bit more risky and just stick a bit in, but not really the greatest way to play these things. So that's Aussie yen. We've got AA asking us about opinion on gold. I've already gone through gold, but I'll just briefly go over it again very quickly. Let me do that very quickly, and then I'll dive into indices. So gold is at quite a key area on the 4-hour chart. Look at this stall in the sell-off. A nice reversal. Looks like a bit of a bottoming formation, inverse head and shoulders. We've got a neckline here, which we're retesting. The 4-hour chart is forming at the moment a bearish engulfing, so I'd be a little bit aware of that, but it's quite a small candle, relatively speaking. So yesterday I looked at this and placed basically tried to play this break of the inverse head and shoulders even before it had actually fully broken. But really that sort of like played out. We made a small amount on that, nothing to write home about, but have been up to 1941. So I consider that sort of like it's a break of the lower highs and could potentially lead to further upside all around the dollar. The dollar index is under pressure this morning. If that continues, then we could see that gold breaking higher. Obviously, we've got geopolitical concerns left, right, and centre. So again, that's a safe haven asset. If we see things kicking off anywhere, this will be one of the first ones that people will be diving into. Let's take a look at indices who've had a nice little bounce back of late. I'm still sort of, I've still got an eye on DAX. We've had this topping formation, head and shoulders formation. We broke the neckline. We come back, retested. We've exceeded that neckline on the retest. So this is looking a little bit more positive than it was last week. We've had 3 consecutive days of positive price action. And today we've had a move up to 15,874 where prices have stalled and just pulled back slightly from there. I'm still looking at this on a short-term basis. The 4-hour chart still hasn't broken back above that Ichimoku cloud. So I'm still mildly negative on these indices. They've had a pullback, but it's not been one of the best pullbacks I've seen in indices. We can see 61.8% fib coming in at 15,921. So just above that 15,009 level, I expect a little bit of a opportunity maybe to sell into that, and that would be in line with the Ichimoku cloud as well. So a couple of things to look at. But yeah, overall, still after last week's candle, we can see that's a really aggressive breakdown candle from that resistance area, close to the all-time highs. We still are 16,427, but we did break that level of higher lows. So still got a little bit of a way to go before we really get into this. But I would even say that we could look at that candle from last week, and we're close to a 50% retracement of that. So looking slightly more positive, but overall, I'm not convinced yet. And we see the fight back we've seen in the Dow Jones as well on a weekly basis. This has been to and fro, been very, very mixed and volatile. No real trend, just a choppy price action on a larger scale. Support coming in down at 33,600, and yeah, 33,600. Was leave it there. And above, we've got resistance around about that 34,500 level. Looking at the daily chart on Dow, we got resistance just up there. So, but a nice recovery, bullish engulfing, and an extension higher yesterday, and sitting there nicely poised to try and get more upside today. Nasdaq, a little bit of potential here. We've got obviously got a nice little neckline around about that 14,700 level for a double top formation if we break that, but we're quite away from there at the moment. A nice little sell-off, but buyers have come in. S&P, similar sort of price action, got this nice trend higher. We've got a potential upward trending support line. We've got previous resistance now turned into support, coming in around about that 4,325 to 4,330. So that's the levels we're looking at. Can't see any other requests, so we'll dive into a little bit of fun that we have on the Talking Bull. Sorry, gun to head challenges. Both myself and Joe's obviously not here today. Pick a trade. We place a stop and target. We've got to do it in front of you right now. We've got no choice. So this is one of the challenges. That's why it's called a challenge. Gun to head is because we've got no choice. We've got to do it. Risk reward ratio has to be 2 to 1 or better, which is something that we apply to most, well, all of our, at least 2 to 1 to all of our trade ideas that we provide on a daily basis. Trades are closed at 9 p.m. unless they hit the stop or target, and we risk 1% of capital. We've had an awful time this year, well down on our account. Started with an account value of 2,000. We're down to 1737. We're still got to continue the same approach. You can see yesterday the two trade ideas. Joe was short of New Zealand dollar, US dollar, and ended up flat, small down, 88p down. And obviously with a 2,000 account, we're risking, or what was a 2,000 account, we're risking £20 on each trade. And I went long of gold on the back of that inverse head and shoulders formation, and it finished onside by £3.19. At one point, it was looking quite healthy, looking pretty good, getting up to that 1940 level. I was getting all excited, started counting chickens, but unfortunately, shouldn't have counted my chickens, should I? So I'm going to basically just have a quick run through what I like to do. I like to look at all 4 time frames and really try and get something which seems to be in line with everything. I can quickly skip through. Can we look at, well, if we looked at Aussie yen, I'll have a quick look at Aussie yen, see if I can see a trade idea on there. It is under pressure. It looks like it's continuing to move lower. I would say that, yeah, looks pretty bearish. Could go for that, or I could go for my gold trade idea again. We've reacted a little bit higher this morning. Still more downside probably in Aussie yen. Wouldn't be surprised. We've broken that recent support level, so that looks bearish. Let's go for this. I'm going to go for a short in Aussie yen, just because Mark can take full credit for this if it does play out yesterday. This is the sort of thing I'll be looking for. Ideally, my stop would be up here, but we're going for an intraday trade idea, and I want to be a little bit more, well, try and get that 2 to 1 risk reward trade idea. Obviously, we've closed this at 9 o'clock. So anything around this level would be good. This is really where I believe support would come in. I don't know if we're going to get that sort of move today. My stop, I'm going to place it. Yeah, don't want to have that stop up there. It's a bit too far away. So having around about a 40 tick stop wouldn't be too bad. Let's do something like this. Let's see if we can transfer that into a trade idea. Create new order. We want to sell it. We want to sell it at the market. We want to take profit stop. We want to risk 1%. And the stop is going to be around about that 93.80, 93.83 level, so about 40 pips. And targeting, let's say, 100 pips. That looks pretty nailed on. 2.5 to 1. I'll go for that. Here we go, risking £17.38, hoping for a nice return on that. So that's my trade idea for today. Thanks, Mark. Or maybe I won't be thanking you tomorrow. Let's see. But yeah, the other trade idea I was looking at maybe was gold. Again, ideally not. It's sort of had this pullback. I'm looking for gold to move higher, to be honest. Maybe it's not going to happen right now, but there's a lot of nice things in place for me to be risking on that. You know, buying here, having quite a tight stop, maybe a $10 stop, looking for that move higher, that safe haven move, which I believe we could be seeing in a few days or weeks. Timing is everything. So let's take a look at what we are expecting over the next 24 hours. We've got CPI out today, so we will see some volatility there. Bank of Canada policy decision, as we spoke about earlier. So definitely watch out for that. I think we were looking at the Bank of Canada, looking at that 25 basis point hike. So remember that. US EIA crude oil inventories out, and that will be volatile as well. We can see that oil's at those resistance levels. Tomorrow morning, UK GDP, and also tomorrow afternoon, US producer prices. And next week, we got UK consumer prices. Thanks very much for joining me today. It's been a pleasure to run through these markets with you. Really enjoyed it, and good luck with trading. Keep it disciplined. Cheers.